So we always want to see positive migration into that region. So we always keep a close eye on this affordability metric. 25 kilometers from Melbourne CBD, you might be able to find something for around 600 to 700,000. So there is that link. So keep track of this always, because everybody asks me how the best suburbs are selected. So I always want to tell them that it's not chasing the hotspot. It's about having a clear framework for selecting the suburbs. And that's why at Property Framework, we always follow a set of rules that we follow to shortlist suburbs for clients. And today, I'm going to break down those rules for you so that by the end of the video, you have a clear understanding of the major things that you need to check before you decide to invest in a suburb. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website, propertyframeworkbuyersagency.com.au, and book a session with me there. Now today, we're going to evaluate the different factors that would impact a suburb and how we need to select the right one. We're going to look at macro level factors, micro level factors, suburb-specific factors, and then really assess whether that suburb is undervalued or not before we make an investment decision. Let me get into this video. So the first one is we want to talk macro factors. What are the macro factors that we want to talk about? So the first one is the population. When we talk about population, we're talking about net population movement. So there's more people going into that area than they are leaving. So when we saw the house price booms in Adelaide, in Hobart, in Perth, we did see a strong correlation between net internal movement of people and that price growth. So we always want to see positive migration into that region. And so in 2025, where do we see that happening strongly? We see that Melbourne has changed from the last 2 or 3 years where it was experiencing negative trends in the population growth, or more people leaving Melbourne than entering. That has completely changed over 1 or 2 years, and now we are seeing good population trends in Melbourne, and that's the market where more and more population is building up. Just as an example to show you where that population movement is happening strongly. The next one is the economic change. Where is the economic changes happening? So just to give you examples, when Townsville boomed, there was a lot of change happening in the economy between 2016, 2017 till now. There was the Townsville City deal, more jobs were being created. The government was spending a lot into infrastructure projects. The CBD was getting revamped. And so a lot of money was pumped into that region. And that resulted in that housing boom that we saw in Townsville. Similarly in Hobart, in 2016, 2017, there was a lot of things happening to that economy, right? More jobs were being created, money was being pumped in, and that resulted in price movement. So we got to look at where is that economy changing? Where are the jobs being created before we go on to select the correct suburb? Those are essentially the two main things that we assess on a macro level. Net population movement, and we also want to see that economy improving, the GDP improving, and more jobs being created in that area. Then we come to micro factors. Now this is what we are more familiar with. This is what we see on the data, right? When the data shows this suburb is hot, that's what we are seeing in the micro level factors. But there's often a lag between the macro and the micro. So if you want to be early into a region, if you can follow this macro, then you would be getting in much earlier before the herd of investors come and look at the micro and start jumping into that suburb. In terms of micro, we are looking at things like rental pressure and sales pressure. So rental pressure is essentially more and more people coming into that region, renting out homes and building up that rental pressure. Sales pressure is when people decide, okay, we no longer want to rent, we want to buy a house to live in. We see days on market dropping, we see stock reducing, we see the inventory levels reducing. That means the demand is increasing and the supply is dropping. So those are kind of micro level factors that we use to make sure that there's healthy rental demand in that suburb and healthy sales pressure for price growth to happen. So that's the micro factors. So there is a strong link between the macro and the micro. Usually a few years, like let's say anywhere between 2 to 3, sometimes a bit longer, Once this happens, this will happen. So there is that link. So keep track of this always, because this is going to follow. For example, I was looking at Geelong a couple of years ago, two or 3 years ago, and I saw that there was massive net internal migration happening there, right? From areas like Melbourne, a lot of people were moving into Geelong, but house prices weren't really moving. And now we are starting to see that effects coming up. We can see house prices starting to strongly move up in Geelong, and that's starting to reflect in the rental and the sales market. So these two are kind of interconnected. Let's move to the third point. We know the macro level factors are good. The micro is also good, but we got suburb-specific factors. So the first one is affordability. Now, this is a big one that we closely look at. Now, if the local residents in that suburb, they can't afford the mortgage repayments. For example, let's say mortgage repayments are $2,500 a month and the locals can only afford $1,500 a month. So that means they can't hold on to that property, and price rises are less likely to happen. So we always keep a close eye on this affordability metric, because we know for price rises to strongly happen, suburb has to be really affordable to the local residents. And next one we closely monitor is the owner to renter ratio. We don't want to get into a suburb which are dominated by renters, where we have 50-60% renters and only 40% own occupiers. Usually a suburb that is dominated by renters, sometimes it also comes with higher levels of public housing and things like that. We want to buy into areas that have very high own occupier levels. We closely monitor that. Then the next thing we want to monitor is the short-term growth. So we want to see the 3-year growth. Over that 3 years, has it already done 60-70% growth? Over 5 years, has it already doubled in value, 100%? So we want to stay clear of those suburbs, because growth has already happened and the chances of that repeating is becoming lesser and lesser. So we want to get into areas where that short-term growth, that 3-year growth, is anywhere under 20%. Ideally, you want it under 10%, but anything under 20% we can still consider. The next one is we want to see if that suburb is undervalued. Now, this is very important. Like, even though all of this can be met, we still want to make sure that this is undervalued, because only if it's undervalued, then there's more chances of growth to occur, right? So let me explain how we spot these undervalued suburbs. So let's say we have, something 25 kilometers from Melbourne CBD, right? You might be able to find something for around 600 to 700,000 today in today's market. 25 kilometers from Sydney CBD, you might only find something around 1.5 to 2 million. So there's a huge gap in prices between Melbourne and Sydney, 25 kilometers from the CBD. So Melbourne, being comparatively very similar to Sydney, has house prices which are much lower. In that context, Melbourne is seen as undervalued. So that's one way where we spot it. The other one is social scores and incomes. So let's say a suburb has, very good social scores and incomes are high, but we find that property prices are low. Property prices are sitting around 400,000. For example, early last year, when I was looking at Gladstone, the incomes, the social scores in that region were very high, but the property prices were still very low, right? Sitting around 300, 400,000. And I saw other regions with similar levels of income, the property prices were sitting at 600, 700,000. So very clearly, that is an undervalued region. So Gladstone was undervalued back then, and it was a good opportunity to get into that market. So that's the second point of how we find undervalued areas. The third one is relative to future infrastructure projects. So what does this mean? So this means that in the future, there's going to be a lot of infrastructure projects coming there. The economy is going to change. It might be sitting at 500,000 now, but maybe 3 years from now, it's sitting at 750,000. So looking at what's going to come, this is undervalued. So we can see that all this change is going to happen in this region, but house prices are only 500,000. Yeah, house prices are definitely going to move up. So that's how 3 different ways of how we can spot undervalued suburbs. So we are not looking specifically into properties. This is on a suburb level, how we spot these suburb, and on a region, how we spot these undervalued regions. Now, the last one, and this is also very, very important. Now, we have all this, but there can be external factors influencing this as well. So what are the external factors? The first one is, and this is a big one, the first home buyer scheme that's going to come up in October 2025. So this is October 2025. So The first home buyer scheme, as you know, whenever the conditions become really favorable for first home buyers in Australia, there's always been rapid price growth. Even booms have happened. If you look at the data historically, whenever conditions became good for first home buyers, when there were rate cuts, when there were incentives being provided to them to encouraging them to buy, house prices always went up really fast. And so now we're starting to see something very similar happening again. This is being introduced in October 2025, and this time it's very different. So there are no caps, no incomes, the price ceilings have increased. So this means that a herd of first home buyers are going to get into the market, and that's going to influence the market significantly. And certain areas, certain suburbs are going to be more affected than the rest. So that's part of what we assess. Where is it going to impact more, and where would prices rise the fastest? And then we also have the interest rate cuts, which is also going to happen. So look at this combined. We have this first home buyer scheme, which is encouraging first home buyers to come in, that's pushing the market. And then we also have further interest rate cuts, borrowing capacities are going to improve. So areas which were unaffordable once are now going to recover and start moving up again. So these external factors would also start influencing the suburb. For example, I want to take an example. Let's say you buy a $600,000 house in Hobart. Under this first home buyer scheme, anything under 700,000 you can buy with a 5% deposit. So to buy this $600,000 home in Tasmania, they've recently abolished stamp duties, which means that up to 750,000 there is no stamp duty. So to buy the $600,000 home, a home buyer just needs 30,000 and they can enter the market, right? Just 30,000 to enter the market, which means that in areas like Hobart, as an example, this is going to really push prices, right? Because the entry level becomes so much easier for first home buyers to enter the market, lower deposits, lowering interest rates. So one of the regions that could get impacted is Hobart. Of course, there are many other regions, but one of the regions is Hobart. So here are the factors that we look at. We want to look at macro factors. We closely look at micro factors. We'll then look at suburb-specific factors. We assess if that area is undervalued or not. And then we look at the external things that are influencing the market. And finally, make a decision if this suburb is good for you or not. So as you can see, there's a lot of things that go into before we bring suburbs to you. So it's a process, and that's how we get shortlist properties and suburbs for clients. So I hope this gave you an idea of how this could be done. Hope you found this video useful. Please like and subscribe to my channel, and I'll meet you in my next video.